And to your second point, I mean, the chatter on Reddit, it's unpredictable, right? But increasingly, I think investors see it as almost table stakes. They need to have this data just to understand what's happening on the internet and trade on that.
Real quickly, Boris, before you go, do you want to give us any hot tips? I mean, if you see the places that might have an increase in job postings or, maybe positive sentiment around the company from inside, are there any other stocks or names or areas people might want to look?
So I'll pitch again sort of our product, which is looking at web data holistically, right? And not only looking, for example, at Reddit mentions, but really understanding what's the footprint of any given company on the internet. Are they hiring? What's the employee sentiment? I really think that the potential to generate alpha is in understanding how all of those data points connect.
All right, Boris, thanks so much for joining us today. Appreciate it very much. Boris Spivak is the COO over at ThinkNum. Let's get over to the trade on these names, talk more about that with Chris Murphy. He is co-head of derivative strategy at Susquehanna. And Chris, maybe you can give us a little bit of a window into kind of what direction I was going with Boris there, but is this largely a retail-driven movement as it was in the past and as we perceive it, or is it hedge funds more involved this time around?
Hey, Kelly, thanks. No, it's clearly a mix, just based on the size of some of the blocks that we're seeing trading in some of these names. When we're seeing 5 options at a time, 1 option at a time, we think that's more likely retail. When we're seeing 2,500, 5,000 block of calls trading at the same time, we're pretty confident that it's a combination.
Yeah, and what would you say is similar and different this time around from maybe the episodes we've seen in the past couple of years?
I don't think it's nearly like what we saw in 2021. And I think part of the reason why is a lot of the short side of these trades, they still remember 2021. They learned their lesson. They have some things in place. They're not quite as aggressively short as you remember some of those hedge funds that were the first time around. I think it's certainly interesting on a day when the S&P is not moving at all. And you think if you weren't looking at this sector, it'd be one of the most boring days of the year as we wait for CPI. So there's some interesting things going on. I don't think it's going to be as big as 2021.
Boris hinted that maybe the fundamentals are the reason why these stocks are taking off, that people get wind of job postings and employee sentiment turning more positive and think that there's a business and ultimately a stock case to be made for that. But your data and some of the others seem to point more towards this kind of short squeeze. GME, 24% short interest, AMC, 21%. Numbers, some of them are lower, but some of them are also still pretty high. So how would you kind of rack the relative importance of a good fundamental story, even if it's one being whispered about, high short interest, which seems to be the most important lever being pulled here?
It's a short-term, short squeeze type of a trade for the most part. It's certainly great if a company has great fundamentals and they can point towards that. But these trades are happening intraday, so they're not long-term investments. And as this trade's starting to move from GameStop and AMC into other names, the momentum chasers who are doing this trade are looking at what's the next highly shorted name that we can look towards. So. Right. That's all really short term. I mean, the names that this is happening to that have strong fundamentals, there are good trades to be made in the options, but it's not buying short term calls.
Okay, so finally, you do think you can identify some of the next candidates maybe for where this wave could be headed. What examples would you give?
Well, I mean, we're just going to follow spikes in call volume, spikes in volatility. Fuel cell, Tupperware, SPCE. Saw a pretty interesting call buyer in Roku. That's more of a mainstream name, but 5,000 SEP 95 calls were bought today. That has a decent short interest there as well. So, we're looking for upticks in volume and volatility like everybody else, but just as importantly, looking for downticks in volatility as a sign that, okay, the momentum chasing trade is leaving these stocks. Because we're seeing volatility, implied volatility levels start to move lower, where is it going to go next? So there's 2 parts to that.
Fascinating. Chris, just before we kind of pivot, talk markets, where are you on the markets more broadly? Are we just waiting on the CPI at this point?
Yeah, I think so. I mean, we're waiting for a little bit more of an all clear that this uptick in inflation that we've seen recently was temporary. In terms of the broader market, I know people are asking, how can you buy it at, we're back to all-time highs, things like that. I would point out we're always focusing on the options. If you're looking at macro options like S&P 500 options, they're very inexpensive. If I had to pick a direction for the next 6 months, I still would think the market's going higher. But what's great about a low volatility environment is you can have some protection on it. If you're not 100% confident about buying the S&P, you don't want to be the last one to buy it at all-time highs. You can have some protection on for about as cheap as we've seen it in a while. So that's what I would recommend.
Yeah, market might be the only place insurance is relatively cheap these days. Chris, thanks so much for joining us. Appreciate it. Thanks so much. Chris Murphy from Susquehanna. As mentioned, despite that rally in meme stocks, the broader market was little changed after that hotter than expected read on wholesale prices this morning. Let's talk about that. The producer price index jumps 0.5 in April and is up 2.2% now from a year earlier. That's the biggest gain we've seen by that metric in about a year. Excluding food and energy, core prices also rose 0.5%. That was more than double the forecast. Will all of it make it more difficult for the Fed to start cutting rates? My next guest says there are 4 stocks he's monitoring for macro signals, and he'd know a thing or two about that. Jake Schermeyer is here. He's portfolio manager at Harbor Capital Advisors. Jake, I'm sure your Fed background, I'm just going to mention in passing so people know that you're not just anyone talking about macro signals here, but I'd be very curious to know where you are looking these days.
Yeah, so I think in terms of the PPI this morning, how that translates ultimately to PCE, which is what the Fed cares about, it's actually a little bit lower than what we've seen over the first quarter. So there's kind of some slight positive news, and I think that really explains why you saw the headline beat, and yet kind of rates markets came down. Powell, of course, spoke. But, once you look under the hood, the PPI was a little less concerning. And so what we're looking for tomorrow in terms of CPI is it's really shelter on one side. It's kind of like waiting for Godot there. We know shelter prices will come down because of what private market rents have done. We just haven't seen it yet. That lag has been much longer than we anticipated. Powell talked a little bit about that today. And then it's the services side excluding shelter. So really the only place we can engage within the inflation data about whether or not wages are at a level that's consistent with 2% in the medium term.
Okay, you have 4 names, and I want to make sure people caught what you just said there. The way that they would calculate PCE, those components of PPI maybe not so concerning. Maybe that's a bit of good news. Starbucks, though, that's one of the names you're watching, down 20% so far this year, not giving us a lot of confidence. Freeport-McMoRan, New York Community Bank, Western Alliance. Talk a little bit about what signals you're looking for and what you think they're telling us.
Yeah, so Starbucks, there's this ongoing debate in very consumer-centric companies right now. Are we seeing some pressure for low-end consumers? And Starbucks is kind of one of the most emblematic names for that. And so you can tell this very idiosyncratic story. Starbucks is facing increased competition, especially in China. And they've been doing a lot of CapEx over the past few years. So have they just gotten over their skis? Or are they telling us something a little bit about the low-end consumers' willingness to kind of take on these higher prices? Because again, the price level has increased more than 20 percentage points over the past 4 years. And so consumers finally starting to buckle. And so that's really what we're focused on for Starbucks. If you turn to Freeport, that's kind of this more secular story. They're one of the best pure play copper names out there. And so, you've really seen a tightening of that physical copper market of late. Is that just a story about kind of some near-term optimism in China, the largest consumer of copper? Or are we kind of starting to get to that kind of longer-term secular story, whether it's data centers that need a lot more copper, whether it's decarbonization where you have to build out the grid? Are we kind of getting to that kind of secular story yet, or is it kind of a short-term China story?
Would you be
and kind of finally for the U? Go ahead,
no, I was just going to say, are you kind of thinking of yourself as a buyer of all of these names? Starbucks, Freeport-McMoRan, obviously New York Community Bank, Western Alliance. Those are kind of bearing a lot of the brunt of the banking crisis a year ago, maybe navigating through that now. I guess all of these, maybe other than Freeport, but are these names that you want to pick up here with confidence about the macro outlook, or are you not so sure?
I think we're not certain, but I think Starbucks, if you're optimistic about the consumer, and I think we generally think we'll kind of muddle through here. Maybe we'll slow a bit from the fourth quarter, but I think, the economic outlook remains positive. And so Starbucks is kind of really at the negative end. And so, you're buying a cheap consumer levered name at a time at a very low valuation. So we think that's a very positive story, and it can, do a lot of self-help there, maybe pulling back on CapEx. Freeport, we are buyers of the kind of longer term secular theme that we are going to need more commodities than we have. copper is a very long cycle asset. It takes 10 to 15 years to ramp up supply. And so we do think this secular story is going to be a tailwind for industrial metal demand for a long time. And kind of specific to the regional bank story, if everyone created a list of what are the systemic risks out there that are known at this point, it's really CRE in the US is kind of one of the easier things to think about. And so those two banks kind of typify CRE exposure, and they were the growth banks coming out of 2020. So a lot of new assets, a lot of deposit growth at very low interest rates. And so they've been kind of more sensitive to concerns around the banking crisis. And so are we kind of getting past the deepest concerns about CRE? And kind of what do we make of the health of these banks going forward? That's why we're focused there.
Yeah, and as like many, all about the CPI, but you're saying not so much tomorrow. You got to kind of wait till September. We'll have 5 more prints and maybe a clearer sense of which way it's trending and whether rents are finally coming down. For now, Jake, thanks so much. We appreciate your time today.
Thanks so much, Kelly.
Jake Schurmeyer with Harbor Capital Advisors. Coming up, we'll bring you all the headlines from Google's annual developer conference. It's underway right now in Mountain View, California, with Alphabet shares hovering near an all-time high. A lot at stake with these announcements. Plus, new numbers from MasterCard showing the consumer spending and traveling. We'll look at where the strong spots still are and where we could start to see some weakness down the road. Michelle Meyer joins us, and The Exchange is back after this.